You're listening to Indications by the Conference Board.
Welcome to Indications. I'm Ataman Ozyildirim, Global Research Chair here at the Conference Board. This podcast is part of a series we're doing on the impact of the coronavirus outbreak. Going forward, each podcast in the series will deep dive into a different aspect of the implications for businesses and economies. The World Health Organization has declared the novel coronavirus outbreak an international public health emergency. Every day in the media, we hear from companies on their plans to respond to the implications of the outbreak for their businesses. What about the implications for China's economy as a whole, as well as the global economy? The threat of trade wars has receded, but the coronavirus outbreak has added a new level of uncertainty to the global economic outlook. Will the effects be temporary, short-term, or beyond? Will its impact on China, the world's second largest economy, reverberate across the globe? Today, I will be speaking to my colleagues at the Economy, Strategy, and Finance Center of the Conference Board. I'm joined by my colleagues Bart van Ark, Chief Economist, Lynn Franco, Senior Director for Economic Indicators and Surveys, Yuan Gao, Senior Economist at the China Center of the Conference Board, and Jun Tan, Associate Economist at the Conference Board. Over the years, the Conference Board has looked at the economic and business impact of similar events. What can economies and businesses expect as these unprecedented events unfold? An event from the not-too-distant past that keeps coming up in the conversations, by way of comparisons, is the SARS epidemic in the early 2000s. Let me start with a question to Bart. How did the SARS epidemic affect the world economy at the time?
Well, that was a different time, Ataman. It was 2003. At that time, China's economy was much smaller as a share of the total global economy than it is now. In some ways, the current episode is much worse than SARS was. In some cases, it's actually quite different. So, at that time, the SARS virus infected 8,000 people. We're way ahead of that now. It claimed 800 lives. Unfortunately, we're ahead of that now. But at that time, it did spread pretty rapidly across 17 countries at the time. And although it has spread around now, the number of fatal cases outside China are fortunately still quite limited. It did shave off from China's economic growth in 2003 by between sort of 0.5% and 1%, according to various estimates that we've seen. And the impact on the global economy wasn't small, but still in the grand scheme of things, it was 40 billion is some estimates that have been suggested. But in the grand scheme of things, probably not all that big a deal. The reasons that it wasn't all that big a deal is, first of all, there was a very big rebound after the SARS crisis in China. And this rebound was also part of a strongly accelerating economy in China at the time. China had just joined the WTO in 2001. There was a big surge in export growth. So all these things helped to basically give more firepower to the rebound that we were seeing. So the bottom line of this is, as bad as SARS was, in effect, the world as a whole, the global economy didn't really notice it very much. The 40 billion, again, in the grand scheme of things, is fairly limited. Today, of course, China has grown to be sort of the second biggest economy in the world, accounting for close to 20% of GDP. So I think in that respect, it's going to be a very different story now.
Thanks for those comments, Bart. And let's go to Yuan, who is sitting in Beijing at our China Center, so you have a view from the ground. And thank you for joining us. I know it's late evening there in Beijing, Yuan. Would you expect the impact of the outbreak this time to be similar to what we saw with SARS in the early 2000s?
We think the impact this round on China's economy will probably be greater than the impact of SARS back in 2003. There are two major reasons behind that. One is that the containment measures taken by the Chinese government to prevent the spread are much more stricter this time than those taken in 2013. Another reason is that the service sector, which is obviously the most vulnerable sector in such crisis, now accounts for a larger share of the total economy in China. Just for the reference, back 2003, only 42% of China's economy is services. Now it's more than 54%. So the impact is probably more severe this time than 2003. But if we can take this optimistic assumption that the outbreak this time can be contained by the end of Q1, then the economy impact is probably intense but temporary. So it's going to be mostly limited into Q1 2020. So in that case, we do expect a moderate rebound in the second half of the year.
Yeah, so a lot depends on how long the outbreak lasts and how long the government's response to trying to contain it might last. So there are still a lot of unknowns. Bart, from your point of view, would you like to add anything?
Well, the immediate effects, of course, are going to be seen in China, as Yuan is saying, and we're seeing those effects already. Obviously, consumption is the first category to look at, but there's also, exports. It's hard to get goods to the ports. There's a big impact on tourism and travel and hospitality and transportation, education. So all these sectors are big, impacted in a big way. But Yuan is right. As soon as this crisis comes under control, hopefully sooner rather than later, all these sectors are very likely to rebound quite significantly. However, the issue really is that the Chinese economy at the moment is sort of in a long-term slowdown, so that rebound that I was talking about in the case of SARS may not really be as strong given the underlying weakening trend of the economy. If you look at the estimates currently, I think most of the consensus estimates which we align to is that the economy in quarter one will weaken probably to less than 5%, 4.7% is a consensus estimate. This is according to sort of official estimates. But if you translate this into quarter over quarter, because these are year over year numbers, if you translate it to quarter over quarter, so basically comparing how will the economy grow compared to the last quarter of 2019, the economy will really not grow very much at all, probably less than 1% only. And if things take longer, then it might actually come to a standstill even for a while. Again, a rebound is very likely, but our current estimates would be that it would still probably shave off about sort of 0.6 percentage points of the growth rate, even for 2020 as a whole. So the optimistic scenario is that, our estimates at the conference board are a little lower than the official estimates, that the economy will still probably not grow more than about sort of 2.8% for the year. Those are the immediate effects. The other thing I would add really is the indirect effects, which I think are a much bigger issue. And that is, the longer this lasts, the greater concern we have about the uncertainty that this is creating. Uncertainty is very fragile at the moment. The trade deal that we had between China and the US actually helped to recover this a little bit, but this is obviously adding to it. And the longer this lasts, the longer it's going to take. So it's that uncertainty element and this confidence element that I think we really need to take a good look at, because that might actually have a bigger effect in the longer term.
Yeah. I'd like to pick up on something that you both mentioned in terms of the economic context. Back in the early 2000s, China was really embarking on a trajectory of very steep growth, and now it's in sort of an environment of slowing growth. So that context is very different. And perhaps another part of the context environment that's different is that a lot of the news about the outbreak and the reactions to offset that came around the time of Chinese New Year. And Chinese New Year, as some of you may know, is a long holiday period where a lot of people travel and a lot of economic activity really shuts down, and it does affect what happens to business activity and also how some of the economic data is collected. So those of us who follow economic indicators in China know that the collection of data and the reporting of the numbers early in the year, January, February, because of this long holiday can be affected, and often we don't have a clear picture of what the economic conditions are on the ground for those months. So it does take a while to really understand how the Chinese economy is performing early in the year, and I think a lot of that is going to be even more compounded and uncertain because of the measures taken against the outbreak and the length of the holiday. One of the things that Bart mentioned in his comment was the way the consumers react to such events that are unexpected, very sort of negative, and it does affect how consumers view the marketplace and their outlook. We have Lynn Franco online who looks after our consumer confidence indexes, and so she's a great person to ask about how consumers might react to this. Lynn?
Well, we have a long history here in the U.S. of measuring consumer confidence and also of dealing with various shocks. So whether it's weather-related like a Hurricane Katrina or a government shutdown or, a stock market crash, what we've generally seen is that consumers tend to rebound within 1 to 4 months. It tends to impact their future short-term expectations more so. And it also depends where in the business cycle we are. So in the U.S., while we're sort of in a mature phase of the business cycle, we continue to enjoy strong job growth, which is really supporting consumer confidence. And as Bart has alluded to, while we do expect maybe GDP to be shaved by a few tenths of percentage points, the impact so far has been somewhat limited, to travel. We know that's being impacted, tourism, and so those are probably more localized. For instance, New York City probably will be hit by the lack of tourism and travel. There's perhaps greater repercussions if this continues, which may extend into the auto industry. But again, this is all sort of fluid. So at least for the time being, for the U.S., we think job growth will help support confidence and sort of help alleviate any negative impacts from the virus. Globally, though, we also do a global consumer confidence survey there, and we had seen in Asia Pacific that, there was a little bit of sort of apprehension growing about job prospects, personal finances, and spending intentions, and this is likely to accelerate and deepen in the coming months. Especially in China and other close-by regions, Japan, Korea. And so there we probably would expect to see a much more pessimistic consumer, and one that's likely probably going to maybe, postpone some spending, hold back on spending, be a little bit more insecure about personal finances. So this could in turn then shave a few points of global growth as well.
Thanks, Lynn. And you have been following consumer confidence for a long time. And, one follow-up question to that I have is whether consumers are different in different countries and economies. Are Chinese consumers fundamentally different than U.S. consumers, or are their reactions, their sentiment follows similar patterns or similar factors?
Well, I think the sentiment across the world is driven by sort of the same factors. Jobs, that's a major source of income for consumers, their outlook on personal finances, all of which then, translates into their willingness to spend. And so I think in particular, in terms of short-term expectations, we're going to see sort of the consumers in the Asia Pacific turn much more pessimistic. And depending then on how this unfolds and what the implications are for, job growth, that could further deepen pessimism in these countries.
Lynn mentioned specific sectors that might be more directly hit, like tourism in New York and maybe, restaurants or hospitality. And there are other similar sectors like travel. Let me go to Bart again. Do you expect some sectors to be hit more substantially directly than others? And would that impact be limited to those sectors, or do you expect a sort of rippling out effect?
Yeah, so again, as Lynn said, I think the first hit is going to be on the consumer side, certainly in China itself, and any economy that is very exposed to China will see some of that being back in consumption. But as mentioned, quite often, we'll see pretty big rebounds in consumption after that. People just making up for some of those things later on, particularly when it comes to goods consumption, perhaps a little bit less on services. The bigger concerns, I think, are actually sort of in the manufacturing and the supply chain area, because I think there what we're seeing is obviously we now, again, for a short period of time, companies in the supply chain can deal with some of these hiccups. They usually have some inventory that they can handle. They were already prepared for the Lunar New Year that was referred to earlier to actually stock up a little bit more. But they need to restock really after once everything starts moving again. So again, it's going to be critical how long this is going to take, and as soon as business comes back into action. Because that will determine whether the supply chain can basically get refilled. So I think that's very important. And then I think on the services side, I think one area to look at is the banking sector. Again, both in China itself, the banking sector, comparing it again back to the SARS epidemic, the banking sector is much weaker now than it was at the time. There's much less of a war chest for many banks to actually step in. So again, if this takes longer, that will be hard. And also, some signals of a weakening financial sector in China may work themselves through the global system and could actually provide some concerns in that respect. There's one sector that potentially can benefit, and that's the pharmaceutical sector. Because they are the ones that obviously working very hard on producing a vaccine for this sooner rather than later. And you actually see in the stock markets that some of the pharmaceutical companies are actually benefiting from them. So let's hope that they will get to a success, but for many reasons. But it won't obviously make up for the overall damage that's been done to the economy.
Yeah, and we saw that media reports that 2 hospitals were built in the region in a matter of 10 days. So perhaps construction would benefit from that too. But it really depends on, the overall effect will depend on, how these pluses and minuses are playing out in the long run. I want to stay with consumers, although I do want to come back to the supply chain issues as well. Jun and Yuan are in China, and maybe you can give us a sense of how the day-to-day life for consumers is changing as a result of the outbreak and the measures taken against it. So let's go to Jun first.
I have been in Hebei province since January, and from January 23rd, Wuhan city was the first city who announced the lockdown, and then soon after that, the nearby cities and the entire Hebei province had went locked down. What that means is there will be no traffic except emergency service and public health aid. There's no traffic going into Hebei or leaving Hebei, or even in Hebei, there will be no traffic between cities and the towns, which has been a bit difficult time for business to run, because even though we won't see that during the Chinese New Year holiday time, the Hebei province has so far rescheduled the first work day after Chinese New Year to be February 14th. And after right now, we only see pharmacies, hospitals, of course, and pharmacies and grocery stores are open. Other than that, majority of the business are remain closed. And because the government has been taking effort to limit the virus transmission, schools are also remain closed, and so students has been using the online courses and even TV channels to catch up on the studies. And we are more focused on the daily necessity supplies. And so far, what I have known is a couple of days after the Chinese New Year, factories which making the face mask and medicines start to open and keep running 24 hours per day. And other than that, we don't see much business open at the moment.
Okay, thank you, Jun. That's very interesting to hear about life in Wuhan. So how about in Beijing? Yuan, you're in Beijing?
Yes, I'm in Beijing. Actually, compared to what's Angie just described in Hebei, life here is, I have to, it's much easier. But we do have some common observation. One is that because of the labor shortage, transportation restriction, it's now hard to get delivery, even for the daily necessities. And also, for the same reason, we see the price at the grocery store is rising quickly. So it's, besides the various these things also cause concern among the consumers. Probably gonna extend the economic impact, even when the workers coming back to work. Such kind of things probably take longer to resolve.
Right. So as people come back to work and resume their daily lives, we might actually see some more pent-up demand, and that's kind of the underlying reason for the expected rebound, however long this takes. But an important sort of implication is that it could also affect the prices, as Yuan mentioned, and we might start to see some more inflation in the Chinese economy. One of the things that was mentioned was how the banking sector might be affected, and financial flows could have some implications. And the financial markets are global, of course, and if there are risks and shocks, they are often transmitted through financial flows globally. Let me ask Bart, do you expect a widespread global event rippling out from the Chinese economy, especially through financial sectors? Or do you think this will be more limited to China's economy and specific sectors?
So at the conference board, we decided that for now we are only adjusting our outlook for China. As I mentioned earlier, the consensus estimate being that, the quarter one estimates will go down to about 4.7% growth. But in a quarter-over-quarter, it really means that the economy is not going to grow very much. And if you just take just the China effect, then for the moment, the impact on the global economy is actually quite small, probably a reduction of maybe, from 2.5 to 2.4% for the year. Now, obviously, things may get worse. I mean, the reason we are holding off a little, though, on extrapolating the damage to the global economy is because, as we discussed earlier, it all depends on the developments over the next 2 weeks or so. So if the outbreak begins to show signs of subsiding, there's some news that might be the case. If business in Hebei province starts up again, as Jun said, by 14 February, we may begin to see some of that. Then I think that the damage on global supply chains, which I mentioned earlier, will be fairly limited, and it's unlikely to be a very big deal globally, particularly if we take into account these rebound effects that will happen later on. Having said that, though, I think it's almost pretty certain that we will see some effects around Asia. We definitely will see effects in Hong Kong, obviously, but also in Singapore, which has been pretty heavy hit, Thailand. So I think in the Asia region, I think we will probably have to factor in more of a decline. I think globally, it all sort of depends how it mixes into the overall industrial recovery that we had hoped to see, right? Remember, we've been seeing a big decline in industrial production over most of 2019. Our projection was that we were to begin to see some recovery of that. That obviously has been delayed, and the question is how quickly can that come back? That's one concern. Another concern is what's happening to the currency. There's a pretty big devaluation pressure on the yuan going on. That is becoming actually a little bit of a bigger concern. We have seen the dollar actually appreciating quite a bit in the last couple of days. So that could have an impact on the economy in the US also, because it obviously is a negative factor for exports. And then on top of that, there was this trade deal, which, China would buy significantly more goods, particularly agricultural goods from the US, and that obviously also has been postponed. So these effects we will see. Now, there is a worst case scenario, or a much worse case scenario, and that is that the whole crisis does not get under control. Let's hope that's not going to be the case. But if that is going to be the case, if this would take another quarter before we're really beginning to see a significant subsiding of these effects, then you will see much bigger effects on the Middle East when it comes to oil, on quite a few countries like South Africa on commodities, or on Germany when it comes to manufacturing. We think that is an unlikely scenario, and therefore we kept it in our back pocket for the time being. So I think for now we would say there's a moderate impact on the global economy. If this subsides, then I think in the next few weeks we'll actually see a rebound, and by the end of the year we probably will then come to the conclusion that economically this has been a blip. What it all means politically is, I think, a whole different question, and perhaps something we should discuss at another occasion.
That's a good point. But economically, we don't really know where we are because a lot of the economic indicators haven't been published yet. Stock prices react very quickly. Other prices might be reacting, and we see some, volatility in financial markets. And you mentioned foreign exchange. But other than that, we'll have to wait to see where the sort of real economic indicators come out. And one of the things that come out first is going to be consumer confidence. Lynn, we'll end with a question to you. A lot of data still hasn't been collected, but when can we expect sort of the next consumer confidence figures for the global economy as well as for the U.S.?
Well, we'll have the U.S. figures Tuesday, the 25th, as 10 a.m., but it's going to be a few months before we have results for our global study. It's in the field at the moment, so it's obviously going to reflect sort of the depths of the crisis. But we'll have to wait until March, really, before we have those results in hand.
So it seems like it's going to take a while before we have a clear picture, and we'll have to monitor the situation very closely. All right, we're going to have to stop there. This has been a great conversation with Bart van Ark, Lynn Franco, Yuan Gao, and Jun Tan about the business implications of the coronavirus outbreak. We've learned a lot, and I thank each one of you, Bart, Lynn, Yuan, and Jun, for joining our podcast. And thanks to you all for listening. If you like this content, please subscribe to the podcast from the Conference Board. Our next podcast will be on the view from the corporate social responsibility perspective, a discussion among our colleagues at the ESG Center. You can find this program and several others from the Conference Board on a wide variety of topics at conference-board.org/podcasts, on iTunes, Apple Podcasts, Google Play, Google Podcasts, Spotify, and many others. You might also be interested in watching our Window On webcast on February 26th. Thanks again for listening. I'm Ataman Ozyildirim with the Conference Board.
This has been Indications from the Conference Board.